soft commodities are in focus after Russia withdrew from renewing the Black Sea food grain deal. Manisha is here to explain the impact of this on grain prices. Manisha.
Well, thank you so much, Will. Yes, we have seen the Russia and Ukraine grain deal being suspended on 16th of July 2023. The Russia has been saying that the two major reasons that the deal was in first place put in was, one, that the grains would be exported to needy countries, and that's not happening. And the second is that Russia said that they themselves are facing obstacles in exporting their own grains and wheat, etc., is the reason they do not want to be part of this. Well, remember, the deal was brokered by Turkey and United Nations in July 2022, and in last 1 year, we have seen nearly 33 million tons of grain being exported, much of that coming in from Ukraine. But Ukraine also continues to export way much of that from the European lines as well. So a big impact of that in the international markets is not expected to be seen. Well, the major point is that we did see all-time highs in many of these grains, oil seeds, barley, maize, etc. That was in May 2022. That is when the war first began, and that is when we saw a lot of grain export being curtailed. But since then, we have seen a lot of grain already come into the market. Markets have been factoring in the fact that Ukraine will be looking at lower sowing and lower production this time around. And the other major factor is that at this point in time, the northern hemisphere harvest is still on, and that is leading to a lot of supplies coming in for the international markets. For the longer term, though, it is going to be about the numbers, really, because in the international markets, Ukraine and Russia are seen as the grain bowl. Nearly 10% of global wheat comes in from Ukraine and 12% from Russia there. 15% of corn, 13% of barley as well comes in from Ukraine. So the street will keep a keen eye on to this one. Also, given the fact that this is an El Nino year, there could be some concerns going forward into the markets there. But until now, in this year, we have seen good corrections come in for many of these commodities. If you look at wheat, we are 14% down in this year. For corn, we have seen a negative of 23% in sense of prices in this year until now. The latest U.S. Department of Agriculture report also suggests that as far as corn is concerned, the inventories are at a 5-year high, so the prices are expected to be under pressure. But wheat could really be a concern here because the global inventories as of now are at a 8-year lows with no wheat coming in from Russia or Ukraine. This is a street, or this is a market you would want to keep an eye on. Also remember that Russian wheat in the global markets is the cheapest, and that's not coming into the international supplies. So going forward, that could be a bit of a worry as well.
Okay. But Manisha, just a follow-up question. Like you were explaining to me earlier, I guess as of now, India is absolutely self-sufficient in wheat, right? Because after tomatoes, the last thing we need is that suddenly we have atta prices shooting up.
Oh, well, absolutely. You know, tomatoes and pulses and oil seeds has been a bit of a concern as well. And as you rightly said, you know, even as government has been selling wheat via Food Corporation of India, and that wheat may have seen some decline. But when you look at the wheat products like an atta or wheat in the retail markets, that is still on the higher side. So all the measures that the government has taken in sense of not exporting and ensuring that there is enough availability of wheat in the local markets may just perhaps continue.
Okay. All right. Got that. Thank you very much for putting that big development in perspective. So there you have it, big rally in the soft commodity, the agri commodity space, thanks to the Russia-Ukraine conflict. We'll take a break on that note. On the other side, we come